Welcome back and thanks for staying tuned into CNBC-TV18. You're watching Midcap Radar. Now let's talk to the management of Aadhar Housing. They reported their Q3 numbers. Disbursement saw good growth. AUM growth also seems to be healthy. To discuss more about the outlook of the company, also what these RBI MPC minutes decisions actually mean for the company, we do have Rishi, Anand, Managing Director and CEO at Aadhar Housing Finance, joining in with us to talk to us all about that. Thank you so much, Rishi, for joining in with us this afternoon on CNBC-TV18. Let's just start before the earnings and talk about RBI's decision for the 25 basis point rate cut. What does that mean for you? What does it indicate for you? As well as we did have the budget that just ended recently. So the IT cuts that we saw, income tax cuts that we saw coming in the budget, do you think that is going to be spurring the demand?
Hi, Vinnii. Good afternoon. Thank you very much for having me. Okay, first thing first, let's talk about the cut. Good news coming in after a gap of, if I'm not mistaken, about 4-5 years. This was on expected lines. I think the industry was expecting a cut of about 25 bips. That has happened. How is it going to impact our borrowings? We have approximately about 15,000 crores of borrowing, which are based on either MCLR or repo rate. Approximately about 10 to 12% of our borrowing is based on repo rate, which will have an immediate impact of the 25 bips cut. The balance funds that we have borrowed on MCLR will take anywhere between 3 to 6 months for us to look at the cuts. Eventually, as last time also I briefed that close to about 80% of our consumers are on floating rates. So whatever cut comes into us is going to be passed on to the consumer. So it is obviously good news for the consumer. You touched a topic on the budgets. On the budgets, couple of good news that came in. One was the income tax slab, zero tax up to 12 lakhs. This is eventually going to propel the demand because the loan eligibility in home loans typically will rise by about 3-4 lakh rupees. Apart from that, what didn't come out in the budget and was announced about, I would say, 15 days prior to budget was something called the Mortgage Guarantee Fund, which was targeted for the EWS LIG segment. So the Mortgage Guarantee Fund, the gadget has been rolled out. It has now become a policy that's going to further propel the demand. Adding on to it, the Swami 2.0 fund.
Rishi, hi. Reema here. Good to chat with you and good to see you. So I think you'd given a guidance of a disbursement growth of 18 to 20% for FY25 and an AUM growth guidance of 20 to 22%. One, does that hold for a full year? And secondly, for FY26, given the tailwinds, do you think FY26 you could do better than FY25?
Oh, hi, Reema. Good to see you and talk to you again. We stand by our guidance number for the year at 18-20% disbursement growth and 22 to 24% AUM growth, which will translate to about 20% growth in PAT. As regards the next financial year that's in question, I think similar numbers we would stand by and give guidance on, which is about 20 to 24% AUM growth.
Right. Rishi, one more point that I want to just pick up on is in terms of NIMs. They seem to be a bit under pressure during this quarter as well as your spreads. They've contracted. So I'm just trying to understand what is the outlook behind this and what actually impacted both of these factors.
I think I would say, yes, there is about 30 bips. If you look at the NIMs, there is a decrease of 30 bips from a 9.5 to about 9.2. It was a combination of incremental yield. So the yield on the book falling by about 10 bips and the cost of fund impact of about 30 bips. I think combination of both impacted the NIMs that we're talking about.
And what is the outlook for the NIMs going forward then? What will be driving them? What are you keeping as a target?
So the way we look at it, Vinnii, it is going to be in the range of 9.1% as we move ahead in the next financial year.
Okay. Gross NPAs, I think, are closer to 1.4%. What is the outlook on the asset quality? Do you think in Q4 things improve?
Yes, Reema, the way our industry works is generally in Q3, because of the festivities, you would see anywhere between 25 to 30 bips drop in the GNPA numbers as we hit Q4 and March end. So from here on, we're looking at about 1.1% kind of GNPA numbers of March 31st.
Okay. Just getting back, is there any number on NIMs and spread that you shared? I kind of missed it if you did.
I indicated NIMs to be in the range of about 9% even as we move ahead, Reema.
And this will be 9% as an exit for FY25, or what will be sustainable going ahead?
Sustainable for the next 1 year as well. And current spreads, we are in the range of about 5.8. And, the way we look at current year, we should be exiting at about 5.75 and stable state next year, 5.7.
Okay. And, Rishi, one more thing that I want to know in terms of provisions also. Sequentially, they're seeing a bit of an increase. What is it that we are expecting over there and in terms of provisions, as well as how do you see the credit cost trending going from here on?
So credit cost, Vinnii, should be, we've always guided, will be in the range of 25 bips to 27 bips, provisioning 35%. And we stand by those numbers for the current year and for the next financial years in terms of guidance.
Correct me if I'm wrong, but I think the share of your non-housing loan book is about 26%, and that's a number which has been trending. That's a number which has been trending up.
So Reema, the way it works is, we work under something called the principal business criteria, which says 60% of your book has to be individual home loan at the balance sheet level, which would translate to 70-30 on a standalone basis, home loan, non-home loans. I would say we still have room. We are 74-26 as we on the book level as we see today, and we still have a room about 3-4%. Having said that, 75-25 kind of number is what we are looking in the long term.
Okay.
Home loan to non-home loan.
Sure. And also, what is the impact of this also? Because salaried versus self-employed, the mix over there also has been changing over the years, right? I believe salaried the mix was around 65 in FY18. Now it's come down to 56, if I'm not wrong. Yeah. So how does that mix also change? And do you see this changing further and salaried mix reducing going forward?
Vinnii, I would say, yes, you're right. 2018, we were at about 64-65% salaried. I think it is more by design every year, and we've indicated this multiple times. Every year by design, we will increase the self-employed portfolio by 1-1.5%, and the salaried obviously substantially drops. So as we go ahead, couple of years down the line, let's say 1.5% per year, the self-employed portion will increase. And we should I would say, balance out at about 50-50%.
Thank you very much for that. I remember the IPO price was, I think, about 300, 315, thereabout. Stock is down well. It's now above 400 rupees. That's Aadhar Housing Finance. Get into a break. On the other side, the management of Motherson Sumi Wiring joins in to discuss their Q3 earnings.